Hi, so following on from my previous two videos about the pharmaceutical industry, well today we're going to look at some more pharmaceutical companies, but they are a lot smaller and they're a lot more exciting than the ones I've looked at previously. So we're going to be looking at Biogen, Gilead, Jazz, and Alexion Pharmaceuticals. Now at the end of this video, I'm going to tell you which one I think is the best investment out of this group, and I'm going to tell you now one of them is very undervalued. Now, if you are new, welcome to my channel. My videos about investments that anyone in the world can make, and I highly recommend going back and watching my previous two pharmaceutical videos because it'll get you up to speed with what I'm talking about. Now, before you rush out and buy the undervalued company that I'm going to reveal today, unfortunately, about 90% of all investors on the stock market, well, they lose money. See, it's a fact. Every year, new people come into the stock market thinking this is where they're going to make all their money, and unfortunately, it just doesn't work like that. See, generally, most investors, well, what they've done is they've read a few clickbait articles from something like Seeking Alpha, they've watched some YouTubers talk about some companies, and then they think that's enough and they go and put their hard-earned money into these companies without really understanding what it is they're doing. Okay, so I know that sounds ridiculous because I'm one of those people, but what I'm trying to do is just give you a bit more of an insight into what you're actually investing in so you can go off and do your own research. Please don't trust everything you hear and everything you read online because you've really got to formulate your own opinions and create your own thesis into your investment. I'm just trying to give you some ideas and give you a bit of background information and look at the finances for you so it makes your life a little easier. So if this kind of thing interests you, please subscribe to my channel because you can then follow along and see what type of investments that I've found because I do this all day, every day. Now back to the pharmaceutical industry, well, it's a very profitable place to be. So let me explain why it's such a good industry. See, the Western world has an aging population, and with lifespans increasing, the need for better and better medicines are also needed. And then there are the patents. A pharmaceutical company can have a cure for something and receive a patent. Well, they can profit on this product for years and years without competition. It isn't a fair marketplace, and that allows for these big profits. But of course, it isn't a perfect industry and it has its own downside factors. Firstly, governments are often interfering. Because this is an unfair marketplace, it means companies can charge extreme prices because they don't have the competition. Now this makes people angry and complain to their politicians, therefore the industry can be subject to politics. And then there's the moral issue. Because of these high prices, well, it just means that some people cannot afford life-saving medicine. And when people are dying, yet a cure exists, well, that becomes kind of a moral issue. And then there's the cheap knockoffs. So companies in China and India make knockoff products outside of USA jurisdiction. So it makes it hard for US companies to protect these patents. So today we're going to be looking at Biogen, Gilead, Jazz, and Alexion Pharmaceuticals, and you might be wondering why I chose these four. Well, I've actually been following these four companies for a few years now, and just recently they keep coming up on the stock screening tools that I've been using. And what a stock screen is, well, it's just a piece of software that searches the entire market based on some criteria that I'm looking for. And I'm planning to do a full tutorial on exactly how I do this, and it's all completely free. So that's a good reason to subscribe to my channel if you haven't done so already. Now, founded by a couple of Nobel Prize winners, Biogen has now reached the market cap of $43 billion. Now that is dwarfed by the likes of AbbVie and Pfizer, but it is still a big company. Now I'm not going to get into the specifics about the drugs they own because the words are all very hard to pronounce, but essentially they treat neurological diseases. Neurology is the study of the nervous system. So think abnormalities in the brain and spinal cord, which is very important work what they're doing. They have lots of interesting new drugs in their pipeline that will hopefully be approved for widespread use in the future. One recent fast-tracked approval is for an Alzheimer's treatment. But nothing in this space is a sure thing. See, companies have to keep inventing and developing new drugs because they don't know what is going to be a big success. Plus, very typical of the industry, patent battles are often fought, and Biogen just lost a case with the rival Mylan for its top-selling drug. Now this is a problem, as now its rival can make the same drug and compete. It's a wild roller coaster in this pharmaceutical space. Biogen has also been buying back shares for over 10 years now, which I love seeing. Okay, Gilead or Gilead, this biopharmaceutical company is the leader in HIV drugs and other antiviral drugs as well. One of huge recent interest is remdesivir, a possible cure for the current pandemic. Now the hype for this has completely disappeared since April, as it isn't as promising as first thought. However, this is not a one-trick pony, and they have many blockbuster drugs. The way things are going, Gilead could be a drug company that may have a very high profile in the future. But one problem I have with Gilead is that they have been pricing their patent-protected treatments extremely high. Now, all the pharmaceutical companies do this for patent-protected products, but Gilead has some very important drugs. We're talking HIV, Hep B, Hep C treatments. That is, if a patient is poor, well, they just can't get them and they seriously suffer. It's a hard question to answer because the company spent millions and millions of dollars to either acquire the treatment or discover it themselves. And if the incentive to make a lot of money wasn't there, well, then the drug companies would stop being innovative. But then at the same time, people are also dying. What you'll notice today is most of these companies are buying back shares, which is fantastic news. Now, Jazz Pharmaceuticals is a lot smaller than the previous two companies at a market cap of only $7 billion. Jazz is mostly known for its sleep medicine, which I like because they focused on a particular niche area of medicine and became very good at it. But on the other hand, well, they make a large part of their revenue, which is over 60%, from just one particular sleep medicine. So the risks are higher here for the investor, as they could get crushed if someone was to make a better product. Jazz are working really hard to expand their product portfolio and grow their pipeline so this isn't such a big issue. So this is definitely a company that might make a lot of money for investors, but it's also a bit of a gamble. So the question will be, if we can get such a good bargain price, then maybe it's worth the risk. They're also buying back shares as well. So Alexion Pharmaceuticals is another smaller company with a market cap of about 28 billion. Now I'm comparing to the giants, of course, so 28 billion is still a large number. Now Alexion have their niche in rare diseases. These are smaller markets, but very profitable. And the big news with Alexion is that Novartis, well, a company I looked at in a previous video, well, Novartis won a case to make a competitive medicine against one of Alexion's biggest selling drugs. But Alexion has a pretty interesting pipeline of new medicines coming along, with an estimated 10 new products ready by 2023. And they're buying back shares, which I like to see in an effort to return value to their shareholders. So now we're going to take a look at the financial position of these four companies and we're going to compare them against each other. Now there are three key areas to the health of any business. We want to see that they can handle their debt, we want to know they're growing, and we want to know they're a well-managed company. And after we check all that out, well then we want to go see whether we can buy them at a great price. So if you want a little bit more understanding on what I'm actually going through here in these tables and what criteria I'm using, well, I highly recommend going back and watching my previous video where I go into a lot more detail. Also, if you have any questions and you're a little bit concerned that you don't quite understand what's going on, leave a comment below and I'll make sure that I address it for you. So in table 1, we're looking at the debt to equity and the current ratio. We want to see the debt to equity under a 0.7 and the current ratio above a 1.5. Again, if you don't know what I'm talking about, go back and watch my previous video where I just go through a bit more explanation. Now, besides Gilead, all the companies here are in a good debt position. Gilead is probably also okay because their current ratio is quite high at a 2.3. They can handle their short-term debt, so that longer-term debt in the debt to equity ratio probably is going to be fine. Now here in the next table, we're looking at the growth of the companies. So we're looking at the earnings per share and the book value per share. So here are the graphs for the earnings per share for each of the companies. As you can see with Biogen, well, it is nearly a perfect graph. Jazz is quite good too. Gilead and Alexion, well, theirs is a little bit more irregular. And they all have upwards trending book values per share, so that's great to see. The next table here is really an indicator on how well the management are running the company. For the return on equity, we want to see this above a 15. That means that the money that the company is using, well, they're using it to make more money. Now, free cash flow is an important number. That's really what we're entitled to as shareholders, so we want to see that growing. And now look, dividends, well, I think dividends are just a bonus. Gilead is paying an over 4% dividend, which is pretty strong. But look, I'm not a big fan of dividends. For me, it's not important, but if you're a dividend investor, here's some information for you. Okay, now here in this table, what I've done is I've calculated intrinsic value, then I've calculated my buy prices, and then I've compared it to the current price. Now, when I was calculating intrinsic value and my buy prices, this was actually really difficult because, well, the growth rates for these companies, they're really difficult to calculate. And the reason they're so difficult to calculate is because I'm trying to predict the future. I'm trying to go with what the analysts think and get a bit of a feel for it myself, but it's definitely more of an art than it is a science. Now, if you're interested in working out how I calculated this intrinsic value, well, you can go back and watch my video called How to Calculate Intrinsic Value, and I have a calculator for free in the description below, which you can have. Now, because I'm having to predict the future and growth rates are very difficult to calculate, we're trying to use these as more of a ballpark guess rather than an exact number. So all the current prices are under intrinsic value, but they're a little bit higher than my buy prices. Biogen being the only exception, I would say that is just about on buy price. So after doing this research, I think we might have found something here in Biogen. They definitely get a pass for their debt. Their earnings per share looks great historically and book value per share as well. Return on equity is high and the highest out of the group. Free cash flow is growing. They are buying back shares and have been doing so for over 10 years now. And it is very close to my buy price with a lot of upside potential. Now, my buy price here is just a guide because the growth rates are really hard to predict. Now, they of course have some downside risk with the lost patent battle with their rival, plus they are in the pharmaceutical industry, which can be influenced by outside factors like government decisions. But I think out of all the companies that I've done in this pharmaceutical 3-part video series, well, I think Biogen, well, I think they're the best opportunity. Now, I have no investments in the pharmaceutical space, but I think my first investment, if I was to go into it and I felt a little bit more comfortable, it would be Biogen. And because I really don't know the ins and outs of the industry that well, I think I would wait for a far lower price. Because I'm not a scientist and I'm not in the medical field, I have no experience in it, so I really don't understand the market dynamics. Now, I can research and read up as much about the industry as I can, but at the end of the day, it's really just not a simple business model. Now, of course, there are other industries that I have invested in, like the oil tanker industry, but that industry is just far simpler to understand. So biotech and pharmaceuticals, well, they're just unfortunately a little bit out of my depth. What do you think? Do you disagree with that? Do you agree with that? Let me know in the comments below. And make sure you subscribe before you leave, because in my next video, I'm going to go through how I use a stock screening tool and how I do it for free. And a big thank you for all of those who made it all the way to the end of this video, and I will see you next time.